Hello, everybody.
Hello.
How y'all doing today?
Against those things.
It's going. I'll give it that. It's a short week, but it kind of doesn't feel like it. How we feeling today, guys? Anything good? Anything bad? Ben, you giving money away?
I am. Yes.
Come on,
Anytime
what the hell?
I play options directionally, people should just take the other side.
I feel like that often. Yeah, I feel like that often. Every time I place a trade, it just goes the other way. But that happens sometimes. So you take your losses like man and move on.
Yeah, it was small. I mean, it was just kind of for fun, sort of a very small position. But
see, yeah, that's good. Yeah, it's the big ones that sting the most. But yeah, sometimes you're hot, sometimes you're not. It just happens.
Yeah.
So we'll give it a minute or two here. Wait for some other folks to join, but not too long. I am really going to try to keep it within the bounds of the scheduled time today. So we'll see what happens. But pretty much what I was going to do here was just kind of go through the normal charts and kind of talk about hedge levels. There's been some questions about that, and then I'll leave it open for questions and such. Sound good? Any burning questions or things you got to get off your chest? Gaines, why are you so short? My God, what a disaster. It'll be fine, hopefully. I could see the people watching this later. They're going, oh, man, he's got to stop making jokes about crappy short positions. I got no new material, guys. All right, any questions, comments, concerns? Okay, cool. Well, let's get rolling without any further delay. All right, I'll start out with the Nasdaq. 1 second here. Let me get all this stuff going. All right, you guys should be seeing my my whole screen here. Okay, so pretty much, I guess what I wanted to do was just kind of walk us through like where we're at today and kind of what we've been seeing. So I'll focus on the 1 hour chart because I feel like it's just a little easier. So I'd say over the last couple of days, we did get to see this little tiny pullback here, and before I kind of launch into that here, I just want to share the setup. So in conjunction with Alex, he's got this, all the charts going up and to the right, and I don't necessarily disagree with that. It's just, where's it going to stop? And I think that we've had enough resistance at this level, or levels, I guess you could say, where I'm starting to get, like as we see tops and declining volume. I mean, we can see that the volume is declining overall. If we put it at the daily level, we can see that the volume is, I mean, it's mostly buying until we get to about this, this 1.236 level. And once we get there, we start to see the volume picking up. There's the tariff stuff that was going on Friday, but then that was walked back right away. But basically, as we're kind of going through this, you can certainly pick out, and you can make out two different types of patterns. So you could say that this is an ABC, which is what I think it is here. It's just white, the white drawing, and then there's also the orange, which is the 5-wave. Now I apologize if that's a little hard to see, or the contrast is a little weird. So with that being said, there's one of two ways where this could go. I think here, you could make the argument that this little breakdown here at the 200 is one of these it's just another like ABC within, but it doesn't really stop here, so it doesn't really align. So I don't really know if that's correct. So I'm thinking what we're looking at here is just an extension overall of the Nasdaq here. So the levels that we're seeing that I have bull targets 1 and 2, These are I guess the theoretical maximums of what a sea leg would do. Now in a super bull market, you can see a sea leg go to the 1.382 level. You can even see it extend higher, but then it's not really a sea leg. It's more of like a wave 3. But what we're seeing right here, I think, is for the Nasdaq, it did make a new, like a very, very small new high, but it got sold down right away. So what I'm kind of thinking is that, we did see this very quick, like wave 4 sort of thing. And if we do see this this quick move higher, I guess the easiest way to play it is to just take longs, like little bites at longs for hedges. I certainly wouldn't go long at this point in like a wave 5 if it ends up being a wave 5. That would likely take us to around like this 21,768. But I'm really kind of doubting that. I kind of think that this looks more like an irregular sort of pattern. And what I mean by that is with a higher high, this little higher B wave here, if you measure that out, you could get a maximum here of around like this 21,805. So it's pretty close. So I'd say like the 21,800 level, 21,770, that sort of 30-point delta there. That's, I would say, like it's if it's going to go beyond that, then we're talking new highs and all that sort of stuff. But I just don't think that that's going to happen at this time. I think like a pullback right here would be healthy. Even if it is going to continue, we still need to really watch this trend line. So this, in my opinion, this is one of the big keys, is that if we don't see this 5 wave sort of move, and you have your longs, you have your long hedges set up here. If you don't see the kind of moves like this, probably what we'll see here is like a irregular sort of pattern. Maybe it might move up a little bit more and then come back down here to test maybe like this 200 moving average in the turquoise line. And that's where you could see it's either going to be the first step down in a larger series down, or it will be like it'll be like a longer term wave 4. As long as it doesn't really breach the top here of this 19,200 level, then technically it doesn't violate the rules of Elliott. But I guess before we kind of go too nuts with that, I still wanted to just be pretty clear on this. Like, what we're seeing right now is, I think, the most difficult part. It's where we're trying to figure out if we're supposed to stay long and wait for all-time highs, or if we stop here and then that's it for a long time. Could be one of those like generational high things where, well, I mean, it's not, because it's a retracement yet, and we haven't really made a new high yet. But way back, here like in February when we made this new high, that's where we did see this ABC down. And as far as I'm concerned, this actually kind of does look like a flat. And I think, Fred Frog was mentioning that as well, where if you see a flat like this with no new high, then you should expect 5 waves down. But there's always a 3-wave ABC in the middle for this B wave. Now, the B wave top is always that, you're always kind of wondering what it's going to be, because if you're looking at, Fibonacci levels, let me pull up a clean chart for this. So looking at the same Nasdaq chart, if you're looking at these, Fibonacci levels, the first one that we kind of thought that there would be some resistance and then ultimately a pivot was right around this 0.618. Now, typically, if you see a wave 2, like a wave 2 retracement, it's usually pretty sharp. So you'll see like a big rip down after only a couple of days of consolidation. But this is still a really big long-term pattern. So there's still a lot of people that have trapped longs. So it's probably why you saw a big run up here after really like the last 2 weeks of May here. But since then it's kind of changed. So I think that like all the big leaps and gains and things like that, that's kind of old news now. Now what we're doing is we're markets are kind of digesting. Like we just had earnings, we just had NVIDIA today, we had a couple of these other things that have kind of manifested themselves. But we're gonna get GDP forecast data tomorrow. If it's bad, it's probably gonna be a sell catalyst. But I'm still really just I wouldn't say concerned. That's kind of the wrong word for it. But I'm more of I just want to be cautiously optimistic for shorts. I'm trying not to be a fool here and say that, oh yeah, it's going to reverse right here and everything's fine. It's not, because we don't have confirmation. So even with a slight new high today, we did see a ton of sell volume, especially in the close. And even though it looks like markets rallying just a little bit here after the NVIDIA earnings, or I think they're having the call right now. But the main takeaway here is that everything else isn't really screaming up. We still have things like the S&P, which this is in my opinion, this is a very clear sort of like ABC, or you can see the ABCs within it, and it's kind of like a microcosm of the larger pattern. And just kind of freehand drawing it here, this is probably a 1.236 level extension here. Oh, nope, I lied. But if this ends up being like a ABC sort of correction here, it could take us down to the 500s, and longer term it could be it could still be a wave 4, but we just don't know if that's gonna happen yet. I don't have the moving averages in here right now, so I'll pull up like the Dow. But just to kind of illustrate the point here, we're right at these key levels where you see these moving averages, like your 200, you got your 50, and I mean we've blown way past the 50, but the damage has already been done. So now that we have this like death cross sort of pattern here, right now we're just kind of trying to find a top, and there's two patterns here that call my attention. This is called a diamond top. It's not a very well-known pattern or really used a lot, but it's still just something to be aware of. I'd say I give it like a 65% success rate, maybe less. It's not like the head and shoulders, which is also within the same pattern you can see here. So it's either diamond top or head and shoulders, doesn't really matter. The concept is the same. The reversal patterns, and we're also seeing a lot of trouble here with the Dow getting above its 200-day moving average. Now, yeah, we could have these big rallies here, but it's still on declining volume overall. Really what you're looking for is this steady decline of volume, and then all of a sudden you start to see these big spikes pick up, and you're going to see selling and buying, that kind of thing, to recover, whether there's a news catalyst or not for like tariffs. It doesn't really matter. There's still you're still going to see similar chart patterns and similar behaviors with how prices move. So you'll see sort of the similar case here, only the S&P is bouncing off of its 200 with some strong volume. That is a signal of strength. However, it still needs to continue to stay above it. So right now we just haven't made a new local high, which is not good for the bullish thesis. And even if we did have if we did have like a small sort of correction here down to the bear target 1, at that point it will probably hit the the 50 and do and test that. But I think it would actually go down a little bit further and test this longer term trend line. I mean, this is in the grand scheme of things, when you kind of zoom out, and I'm sorry, there's a lot of junk on this chart right now, but in the grand scheme of things, if you zoom out, this is still a very long-term trend line, that goes all the way back to April of last year. And just because we had, let's say pretty much the entire month of May above it, doesn't necessarily mean that it's going to stay above it. You can see that long term with some of these different moving averages. Like you can see that it'll go above it for let's say 2 or 3 weeks, and then there's just not enough strength to keep that momentum, so then it just declines back below it, and then you get another wave of correction, and then you go back up and retest it, and that dance kind of happens for a while in a normal sort of market that functions back and forth. But this market is definitely not normal. We've been seeing a lot of these weird things happening, but I guess I just really wanted to stress here that with equities, we see a lot of these 1.236 extensions. We see a little bit of the violation here, but then mostly it kind of gravitates back towards this 200-day moving average, and that's the two of the key takeaways there. And for small caps, you can see it's very similar to the Dow. You got some declining momentum here. This sea lake's probably a little dramatic for now. It's probably more like this, so it doesn't violate the the wave one, if it is a wave one, that kind of thing. So this is, I guess I just wanted to pause there and ask if that makes sense or if I'm missing something. I highly recommend you guys interrupt me, but I guess as far as I'm concerned, this is the most difficult part of markets, is not just the first wave down, which is, yes, it is the most difficult to forecast where it stops, but the second wave up, whether it's going to be a B wave or a wave two, that's the hardest part, because it can extend. As you can see, it's we have these big longer term trend lines you think hold, but then they get, the bulls cheat and they gap up above them, and then they never come back down for a month. And that's just what happens. So, being trapped short, yeah, it sucks, but I think that we're still at some sort of inflection point where either we're going to move up just a little bit more, or it's going to, or we're going to see, a rollover here sometime in the near future. I think with a lot of the selling and stuff today, if we zoom in, I just kind of wanted to show you what that looks like. So if we have, so if you look at like what happened towards the end of the day here, this was more volume than the opening drive, and that's huge. So somebody is testing, somebody's testing the lows, and trying to see what the buy support is. So if you were to look at this on a smaller scale, you can make out that there's there's definitely an ABC here, but that's just, 1 degree. The higher degree is more of like this. So whatever this retracement's going to be, so more than likely you'll see some resistance here with NVIDIA. You did see a decent amount of selling into it, and probably just some regular old consolidation here. But if it does end up stopping there, if it goes a little bit higher, then you'll probably see just resistance in general. But again, if it just starts ripping up higher and higher, then it's important to consider hedges. So before I talk about hedges, any questions? Does that make sense? Anybody thinking I'm crazy? Tough job, guys. It's tough. It's tough when you're trying to be an analyst and you're trying to figure out, or like, where does it stop? Because people got big money on the line. And while I still can't tell you what to do, it's still important to know that there are things that that are just variables. Like it's a very easy case to make this 5 wave up kind of move and be able to hit this bull target too. But after that, where does it go? Either pivots there or it heads back up here. We make an all new high, and that's that. But if we do make an all new or an all time high again after this, I don't think it'll last very long at all. I think it's more of like a low volume wave 5 kind of last hurrah sort of thing. We're really starting to see some weird data coming in, like auto sales and stuff like that being front run with tariffs. Tariffs are inflationary no matter how which way you spin it. Metals are headed higher. They're like, as a hedge, people don't want to buy bonds right now. Fed's holding rates flat. There's just a lot of negative things that are not growth drivers right now that are impacting the general market. So the fact that we're equities are climbing the wall of worry, I would please direct your attention to the yield. The yields are at levels that caused big dips before, and we really haven't seen these levels since then. So you can't have, it's kind of mutually exclusive. You can't really have higher yields and also higher equities because there's really no safety trade. So that's why you're seeing a lot of crypto headed up. You're seeing a lot of these other little fringe assets and stuff getting bids. But I still just think that there's a lot of noise going on right now, and there's not a lot of clarity, and markets do not like uncertainty. So I guess in summary here, it's all the equities are looking inflated and they're kind of topping, but I think that we'll probably see a maximum here in the near future, and then we'll likely take a turn down. All right. Any other questions about equities, or else I'll go to I'll talk about some of these hedge levels. in some of the strategy here. Okay, so I put some of these levels on the chart. So just like, hedge along 50% kind of thing. The object here is that the upside would be limited, right? So if you're talking about like, let's say we see this tomorrow where it kind of jumps up above, makes halfway of a new high, then goes back down to test this, trend line, and then heads back up again. So you would be trapped, 50% long, pretty much close to the top, and that's not good. But if you went 1-to-1, you would just be dragging your losses back and forth, and you wouldn't be making any money. But if your position size was small, then you could kind of feather in some hedges, back and forth. However, the concept here is that, like the bulls, this is now the third time that they've made an attempt at a new high, and it's only been incremental. It's getting sold down, left and right, and you can just see it's getting to hit some resistance. So I think that, once if you're just talking about hedges and like what to do about it, really you're just preventing a run to the upside. I do think there needs to be some sort of catalyst for that. Like there has to be some sort of, like the Fed lowers rates, or, I don't know, Jesus comes back to earth or something, who knows, whatever the catalyst is, there's got to be some sort of something that is a driver to continue to push equities beyond these levels. Now, again, the bulls could cheat again. They could, they could juice the market, and, during a time when nobody could, or like, when nobody can do anything about it. That's how they got above the 200 daily moving average. And that's super frustrating because you do everything right. You set stops, you set your limit orders, and then it still doesn't really work. And that's not a common occurrence, but it does happen. And you just got to kind of roll with the punches. So again, the strategy here, hedge 50%. And if it does make that small incremental new high, it's not the end of the world, because if it does roll over, like in the example here, so if it does roll over like that, then you can add that other 50% here, and then you cost average down. So then when you do see a retrace, you can exit those long positions here, or you could keep it 1-to-1, and you could take off 50% or something, and leave the other 50 as a runner. So if it does this and goes up to this new bull target too, great. You've made money. Or it doesn't do any of that, depending on the strength and depending on the price action. So I guess the theory behind this is you can still, because we are kind of getting close and prices are behaving a little weirdly lately. I'm not sure if that's a word, weird, whatever, you know what I mean? Because things are looking toppy at the moment. I don't know if that's a word either, but I'm gonna roll with it. If you do get a hedge triggered, that's 50%, just trying to protect your upside. Yeah, it's frustrating, but if it does retreat back after that, you can still capture some downside, and then you essentially add in that other 50%. So for example, you would just take this order and drag it down here for when we see like an eventual test of the low. So you're still making money on your shorts, or you're recovering money from your shorts, depending on where you were before this. But then this essentially brings you back to about here, like 21, let's say 21,200, if you do it correctly. So then you're 1-to-1, and then as that price appreciates and then retests the high, you'll have made money on the whole deal, providing that you don't overtrade it. So that's really I guess that's really a big thing to flag, is that we don't know that this is going to happen, that drawing in the blue, but if we do get a pullback and a bounce, most likely there's going to be another run at the high, and you can assume that it'll be like a wave 4 into a wave 5. So we'll just need to count the waves and make sure that it ends up being what we want it to be. All right. So hopefully that helps with the strategy for hedging. At least that's I think the most important hedge scenario to cover. Let's talk about gold real quick. Gold is doing a sell. I see, this little head and shoulders here, kind of poking through. And now we did see like a breach lower. So hopefully we can get some lower prices, because this does look like a pretty solid bull flag. And this target up here, this like 3,600, I think is reasonable, for, especially since gold is like that new hedge trade. So one of the things that I'd like to do is, if we do see this 100 level again, I'm not going to wait and just think that we're going to see a lower low. The thinking behind that, by the way, if you're wondering why I didn't add any longs, is because typically when you see a pierce of a key fib level like this, the A equals C level, and it moves down more than a couple points, odds are it's going to hit this next level down. But as you saw, there was just massive buying and screw your chart analysis gains. But anyways, the long story short of it is I want to add some longs in this sort of area once we get there. And I'll probably use miners. So I'll probably use NEGT, and I'll probably do like maybe a bull call spread or something with GLD. And I'll explain all that stuff. And if I don't, please, I'm happy to go through that. Silver's looking like it's doing like a little bull pennant here. So I'm thinking that if you're a futures kind of trader, that might be a pretty good long opportunity. I see that the volume is headed lower, and that typically means when you see the selling, that the selling is kind of drying up. That's more like that convergence. So at a top, we're looking for divergence with lower volume and higher prices. But when it comes to selling, we're looking for a convergence of the selling kind of drying up as the volume is getting lower, and that's also meaning that the accumulation is almost complete. It also kind of depends on where it is in the chart. Oil saw a bit of a rise today, but it's just kind of clustering and kind of looks like a weird channel developing here. I'm not so concerned about shorts. If it does head up higher, that'd be great, so we could exit some longs. But some volatility would be nice, so you could get out of some of these trades. Either make up your mind and head lower to bear target 1 and kind of complete this little triangle, or head on up to test the 70s again. Either way, we should still be able to close out the long or the short position in profit. I'm not too worried about that right now since it's hedged 1-to-1. Gas has been a bit of a sleeper. I'm not happy with with gas, just because I feel like this move down here, like if you adjust the contract, it's just a retracement, but it depends on how you're looking at the chart. I just think it's a little overblown. If anything, with the stuff going on in the Ukraine and Trump being mad at Putin and stuff like that, I would think that gas is gonna get a little tighter. With the supply here, especially if there's any new sanctions or things like that that are implemented. So stocks here, I mean, most likely you're going to see a higher high. I mean, right now it's just kind of testing its 200 daily moving average here, the turquoise line, and plus it also kind of looks like a flag. So I mean, or at least like it's one ABC down. You kind of see like the ABC. They'll probably see another ABC with a higher high, and I don't think it'll get much higher than like this 219 level, because that's the longer term 786 fib level. So this extension zone here, it's really more just kind of flagging that if you're short with stocks, I think overall, like eventually it's gonna play out, and we may be surprised tomorrow where we might see let's say NVIDIA gets sold down, we might see something like this. Where it actually does start to deteriorate. So that'd be good. Cash out some stuff, but it depends on kind of how high this B wave goes. It could go as high as this 213 to test this daily moving average, but overall, I think that there's both cases for bull and bear. So hopefully it's not confusing. It could be kind of clear as mud here, I guess you could say. When you're looking at these bigger long-term targets, and also like trying to figure out like what is actually topping or not. For Bitcoin here, last but not least, sorry, I'll show a couple others. This just kind of looks like a wave 4, or like a let's see here, like a 5-wave kind of consolidation, taking its sweet time up here to this bull target, this like 114.700 level. I do think that there is a possibility that you could see this sort of irregular flat develop, especially if Bitcoin now becomes like the long trade, like a good hedge trade, because nobody wants to buy bonds right now. If that is the case, then look for this sort of 1.382 level, which is this 122,758, which means that BITO would be a good long, but probably not for an extended period of time. Let's see what happens if Morena gets to this bull target too. But in theory, the maximum here for a regular B wave would be this 1.382 level. Bitcoin would be a pretty solid short then, depending on the price action once it gets to that level. In my opinion, you'll probably start to see some of these bigger sell spikes that kind of signify that things are slowing down. All right, so let's talk real quick about here. You know what? Let's do a quick measure of this. What happened? This retrace after the big sell, and this wasn't unexpected. Oh, that's right. One thing I wanted to show you guys. So with a flat pattern, so let's say this is like a wave 4, and we should expect to see some higher highs or whatever. Sorry, get this out of the way. So you should see something like this where typically a B wave will the maximum height of a B wave here for a flat is typically this 0.854. Now you don't hear that a lot, but it's I guess in like your Elliott wave books and such, it is a pretty common stopping point for a high B wave. People wonder like, oh, why doesn't it stop at the 0.786? Like 0.854 is not really like a fib level. Neither is 0.5, and we still see a lot of pivots and things at those levels too. So I guess in summary, we did see a common retracement after selling, and I think Mal was saying this at the end of the day today. He's just saying like it kind of looks like a decent long, because I mean you're right, because here we are, we see an ABC down, and the next thing is either a pivot back up like this, or that could take a couple minutes like we saw today, or it could take all night like with futures. So kind of how to read this here is we ended the day, we ended the trading day with extended hours, where this is now at a pivot point, or a B wave pivot point. So my expectation would be tonight to see a lot of bulls trapped who bought it up overnight and have some calls and stuff, thinking that I don't need to close them, after hours trading, that kind of stuff. And then you could see something like this where there's a C leg pullback. I mean, pullback is healthy. Just like a constant blast up for equities is not healthy. Or like a blast down, with just tons and tons of selling. Oversold and overbought are really not fun conditions to trade, because they're very, very easily reversed. And topping is always a process where bottoms are an event. And I still want to be clear about that, where if you have patience, yes, things will eventually roll over. There's going to be somebody's going to say something stupid. There's going to be some bad data or whatever, and there's going to be something that kicks it over the edge. But the one thing that I think is a huge, is a really, really big sort of signal here, is that all of a sudden you saw these big sell spikes. Now, maybe that was caused by Trump tweets or something like that regarding NVIDIA with chip exports or something to China or whatever. The taco trade is becoming a thing, right? The mentioned in discussion today, but if it is reversed or whatever, I mean, doesn't really matter. It's we still see some resistance here from the bears. So, and also at this point of like your cycles, we've gotten to the point where there's enough sellers and enough bears that have accumulated enough positions where they're going to start to defend these levels more. Whereas before, you zoom out and you look at kind of how we got here. Sorry, I got the VWAP thing in the way, but you see a lot of gaps. You see a lot of just running up, and there's not a lot of resistance. That's kind of common for like a wave 3, just because there's not a lot of sellers yet. But oh yeah, sorry. One thing I was going to mention is that, remember I showed this kind of cup and handle pattern before. I think it was a couple days ago. I want to say it was Sunday night or Friday night or something, whatever it was. It was it's similar. It's we did see it. So this is just something to keep in mind, that cup and handle pattern is it looks kind of bullish, but this is just more of like a rounded top indicates weakness, and then once you had this ascending wedge here, it does roll over at some point. So like I said at the beginning of this, we could either see like a continuation higher, where we just kind of head higher. We see this next extension level hit, where it makes a new high, and you see like a 5-wave sequence here, and then it kind of rolls over, or you see it kind of top out here, and then you see it roll over. Well, I guess we'll have to see what happens tomorrow. But again, with the GDP data coming out, it's probably going to be interesting, to say the least. Okay, so now let me show you guys real quick. Let me show you guys. Let's see, Tesla. A lot of you fine folks are in Tesla, or shorting Tesla. So this one's also been a little frustrating, just because earnings were hot garbage, and that is a technical term for it, hot garbage. And here, just in case you guys didn't see the earnings, there you go. That's it's not good. So for a company that's got $1 trillion and 1.15 trillion of market cap, you definitely don't want to see their earnings look like that. So from a structure perspective, when it comes to wave trading, something I just wanted to clear up here. So with wave trading, it kind of works like a logical function, like a lot of if and then. And you have a series of patterns you can kind of pick from, I guess you could say. So let's say there's a bend here, this like ABC. So like if it gets to this 382 fib level, so like 319, that could qualify as a wave 4 top, and then you have another 5 waves lower, and that was your wave 4. So that would make like this 200 level the bottom of your longer term pattern. So since that didn't happen, so the if then is, okay, 382 is breached. The next scenario is it heads up to 50% for a retracement, and then it pivots there, and that would mean that it would be a B wave. So, okay, now if you're going to think that's a B wave, then we have to go back up here and take a look and see at some of the other pieces. So we did actually see this. We did actually see a 5 wave down with a very, very small. I'll put this in white here so you can see a very small lower low. So we did see that, and this ABC up is, in my opinion, drawing to a close. It might head higher to like this. I have this 1.236 here, or the 370, or this 382. I think more than likely what you'll see is it had a little bit higher to this point 382, and then reverse, because if you have a 5 wave down, most likely it's a wave 2 of a larger 5 wave down. Now, I know you're probably thinking when you're looking at this like, oh, yeah, it's not going to happen, and it might not. But all the textbooks say that, or like, the wave textbooks and stuff say that, like this 0.618 is a very, very common stopping point. And like I also mentioned earlier in the call here, this 1.382 level is a common like B wave sort of stopping point. So if it's an extension or if it's convergence of fib levels, then you should take notice. So this 382 level, I think is probably more likely to be what we see as a final top. We might see maybe like a wave 4 here. Let's say it hits this 1.236, and maybe it does this to make like a head and shoulders and then fakes everybody out again. That's possible. So I guess plan accordingly for that. But I just think that things are getting a little bit lofty, and you should start to see some sort of pullback, soon, and not this continued, this continued buying that we've been witnessing. So as long as far as Tesla is concerned, if you are short, the TGBF fund is short. It's just one of those things where your if then statements have been proven incorrect, and you just have to choose the next possible scenario. So you can't get mad about it because you've done the analysis. You made the best decision you can with the information you have at the time. I can personally guarantee you not everybody has been long and strong since the bottom of the bottom of the rally. Even if people say they are, they're probably lying. Like a whole lot of fund managers have missed the boat on this. A whole lot of pension plan money managers are have skipped it just because everybody's scared about what's going on. Professionals are creeped out about what's going on right now. The market is not functioning the way it typically does. There's not a lot of usually it's a gentleman's game where the bulls pass the ball to the bears, and there's plenty of warning, and there's lots of even buying and selling. There's not a lot of stop hunts or after hours activities, that kind of thing. But there's been a lot of that stuff recently, and I think a lot of it is just a byproduct of how crazy things have become. So fund managers are chasing alpha, and it's kind of you're not going to see a lot of participation at these levels anymore, just because you didn't get a lot more buying in a time to accumulate down lower. So with Tesla, it's just been climbing and climbing, but it's not unlike the other indexes. So I guess that the main takeaway is that if you're looking at other stocks like let's see the video here. Where is it? But if you're looking at some of these other stocks, you'll see they all have a very similar pattern. So they have these quite high retracements here, and they all kind of look like ABCs. And the C leg has 5 waves within it. And even though I kind of went beyond the target here, there's still a prior level that it just hit, right? So like these are levels of resistance, and as you can kind of see here, even though it's not supposed to be trading after hours, it still is. This is the kind of stuff that you want to look for. So these types of levels of resistance, even though it did exceed the bull target, it's just a squeeze. You knew it was going to squeeze anyways. But it does look like a wave 5. And if you have 5 waves within a larger C leg, then you might make the assumption that it's coming to a close. So I guess to summarize the whole thing, you're getting a lot of these similar types of patterns, a lot of these like ABC up, and with equities, like you don't see a lot of extended 5th waves, especially if we have a lot of negative news and Fed's holding rates flat. The bond market's 10x equities, and the bond market's getting screwed right now. Like there's a lot of different weird things going on that are just roiling a lot of, or ruffling a lot of feathers, and it's having unintended consequences. So the higher than 4.5 or 4.3 really that yields go, you have trillions of unrealized losses on bank balance sheets. All these banks that have to carry these bonds and have a certain amount of cash flow in order to sustain operations. So like you're just seeing some of these underpinnings of the economy getting rattled right now, and you're not really seeing a lot of it in the news. And that's kind of why I'm sticking to my guns on the shorts on this, is because I don't see a lot of positive vibes. I don't see a lot of stability. I don't see a lot of sane people making good decisions. I see a lot of just uncertainty and a lot of weirdness. So hopefully that gives you a little bit of background on like why I'm still kind of sticking to shorts here. I just think that it's been a retrace that's gone a little too far. No other explanation really. So it happens. It's a bull market, or maybe it's bear now. Who knows? I don't really go by those indicators. I go by what the chart tells me. So anytime you have a big dip like that, we already saw 5 waves up from the Japanese yen carry trade situation we had back late last August. You don't see a 5 wave after that, after only just one ABC, because then likely the counts upstream are wrong. So somebody's got it wrong somewhere, and I don't know. Maybe it's me. Who knows? But you can hindsight's always 2020, right? So the best thing we can do is just manage that upside and just try to be diligent and try to be careful with our trades. And that's really the best we can do. I guess before I guess if you guys had any questions, I'm happy to answer them. Hopefully that actually made sense and I didn't just word blah blah blah. I'll steamroll you guys again. All right, so I'll turn it over to you.
Hey, Gaines, I have one question, a basic question actually. How is it possible that with the volume creeping down, sort of, how can the price, how is it going up when the volume is getting lower and lower by the day?
Yeah, that's just so low volume really just shows lack of participation. So when you're looking at like a longer term, multiple days and weeks here, and you see this downward trend, that just means that nobody is, or like not, a lot of people are buying down here, right, to stop the slide, which is why you see these, these big spikes. But as we had the sell off, and then we had this kind of quiet buy up here with a gap. Once you get to these moving averages, that's where people stop buying and they wait for a pullback. But since it didn't really stop and we didn't really have a lot of selling up here, the bulls, again, like they had to kind of cheat to get above the 200 because there was resistance here. If you remember a couple days where we had some selling, we got some top wicks here. You don't typically see this, especially after a big sell-off. But to me, this kind of looks like there was, let's say like maybe the dealers had a lot of options gamma that was still on the books here, where they had a lot of exposure, where they had to hedge. So if that's a driver of that, you're not really going to see a lot of that in volume because it's not really like shares traded. It's more futures contracts traded. So what dealers will do is if everybody's buying puts, they will buy long futures contracts in order to hedge. So you'll see like the futures markets drive up overnight as dealers hedge. And then that's kind of like a signal, oh, market's going up. Maybe let's follow and chase. But it's kind of like retail driven. Even though retail doesn't really drive a lot of volume, it can still be that little extra that goes the extra mile here. So so I guess to kind of summarize it, as you see this like downward trend of volume, that just tells me that people aren't really participating in the rally, and it's more of like people are just letting it kind of go to see where it tops and then trying to sell into it. And that's kind of where I think you start to see these several days worth of higher volume sell candles, and then you see some of these more of like lower volume buy up days. And you just think about it like if you have billions and billions of dollars, if you want to move the market, what's the rush to sell? If the bulls are going to keep buying it up, why wait to sell it unless you're already really short, and then you want to defend your levels. So that's kind of what I think might be happening right here is, with the higher volume, is that you started to see some selling into this or some market sells, but that was also kind of news driven. But now that we've had this, couple day retracement, now we might see some more consolidation and then, potentially another rip down, because you always have to think too that there's inventory that these big players need to offload. So if you buy, $1 billion worth of shares, right around here, and you sold half of those here, and then you sold the other half over here, you have nothing left to distribute. So you want lower prices so you can buy back in. So what you're going to try to do is influence the market and try to sell it down. So it costs you money to spoof the market and sell it down, but the little bit of money that it costs you to do that, you now have lower prices so you can start to accumulate again. So sometimes it's the same firm that's buying and selling. It could be a little confusing, but I guess suffice to say that the lower volume just indicates lack of participation. And if you see here, pull up the sector chart, you'll see that we had I like the chart. Be still my heart with charts. I love it. But you can see the S&P and the red line track behind this, and all this shows you really is just the number of stocks in their different sectors that are trading above their 20-day moving average. And since we've had such a crazy run, we're seeing a little bit of recovery here with the last day or so. But now that this white line's kind of pitched back down. So yesterday it was at like 76% of stocks. Now it's like 50 out of the total. Or sorry, wait, 50, 55. Let's just round. So you want to see participation in like the 60s and 70s, kind of like we were before, where a lot of these other stocks were getting bought. And you can kind of see that here with this accumulation, where you start to see these bars kind of creep up, where a lot of these names are getting bought up, and the percentage of the overall stocks are increasing as the market climbs. That's an indicator that it's that things have bottomed and are on the way to recovery. But once you start to see these, once you start to see the breadth decline, then it's cause for concern to watch out. So what I would be looking for is over the next couple of days, if this starts to step down, in a more severe way, and if like the index keeps climbing, and I think we had a good example of that here. So back in December, where we had all this market breadth that was declining, but the index has just stayed flat. Well, what gives? Well, then we had a big old sell spike and kind of a fake recovery here. But then overall, and then we ended up seeing it kind of decline. But that's just one of those things where you keep an eye on it. It's not a perfect indicator, but it's one that kind of like adds fuel to the fire if you're trying to kind of plot out like what might happen. So hopefully that makes sense. So it's like volume in addition to the other stuff.
So just to summarize that, am I right in saying that volume is really not really it doesn't really tell the direction as such?
Oh, well, volume, I think volume tells a great story. It just depends on the situation. So like, the declining volume here on average just means lack of participation, which means that the rally has gone far enough where inventory is getting low. Not a lot of people are buying in. So if you believe in auction theory, that just says there's less buyers, less buyers out there at these prices. And then, these bigger firms that don't have much inventory left are going to try to sell it down so they can buy lower. Or they just really want to short the market. They don't want to buy anything anymore. So, it just depends. But you always look for volume, like these little pins, kind of like these convergences really with selling. And then with buying, you see the opposite, where price and volume diverge, which just means there's not a lot of buyers. But if you see a convergence of volume and price, that also means that like you can see two things. You can see convergence of volume and price, which means that people are trying to catch the knife, and a reversal is almost imminent. And then you can see the opposite, which is the volume is declining as the price is getting lower, but that means that there's less volume being exchanged. So, and like I said, I think you can see that with the natural gas chart, where so you see the volume here is kind of declining, where then all of a sudden you see this big buy spike. So there's kind of like a tale of two cities here, where you have this declining volume, but the price is going down. So as it converges, that just means that the selling volume is drying up. But then on the flip side, if there's high volume and selling, that typically means there's just a lot of buy volume catching the knife under the surface. And I guess you could also make the same argument for buying, where you start to see these bigger sells at these points of resistance. So even though this does look like a cup and handle pattern, it's still a relatively bearish pattern. And I would expect there to be some sort of C leg down here, and then you could probably see another retest at the top as like a B wave or wave 2 or something like that before it heads even lower. Does that make sense? So I try not to over explain.
Yeah.
I fail.
Try and process that. Yeah. Thanks, guys. Cool.
Any other questions? All right. Well, I believe then that will conclude today's presentation, or diatribe of Gaines word vomit, whatever you want to call it. I'm getting a little loose with my language on these calls. Yeah, I better watch it. It's a family show. All right, guys. Well, yeah, no problem. Let me know if you have any questions. I'm sorry that the market isn't turning around if you're all short. I would love for it to turn around so we could either add some longs again or at least recover some some stuff. But you never know. It could just be right around the corner. All it takes is one day, and you get a 3% down, and everybody's trapped, and they're all talking about the next apocalypse. But not you. You're talking about how do we get to the bank the fastest way possible. All right, guys. Well, let me know if you have any other questions. Feel free to send me a DM or something like that, or post something in the discussion.
Thanks, James. That was great.
Thank you.
Yes.
All right, talk to you guys later. Bye.
Good night.
Bye.